I have been Mr. Social Media. Literally, I've built my entire career and the majority of my businesses, including one that operated in 14 countries, on the back of social media. I have literally been social media's number one fan for 15 years. And you and I were talking yesterday, and I'm like, social media is now the problem. I mean, social media is a bigger problem in my view. And I want it to be said here first on Rein It In, the pilot episode, the inaugural episode. And I think social media is a bigger problem these days than regular media because there's so much out there, and the proliferation of negative news is unbelievable right now. And especially, and I think, I mean, I don't know how we're going to fix it. Quite frankly, I don't know the solution, but I know it's a problem. I've taken my social media consumption, Patrick, down to literally 15 minutes a week.
Yeah, I don't think I've come that low because I do participate in some of the stuff that I push out, in my view, let's say on Twitter, but I'm reading less and less of the feeds that are in there. I'm looking at what's happening in the feeds in Twitter right now about real estate, for example, and everybody's so focused on interest rates. And I'm going, holy cow, there's so much more to real estate than just what's happening in the interest rate world. Having said that, is that the conversations or we can't call them conversations, the threads on Twitter are really kind of more directed to homeowners and first-time home buyers and the view of that world, less about investors, but even the ones with investors, they keep talking about interest rates, and there's so many other things that we have to consider, and as we're looking at this, we're going through the whole real estate cycle, updating the real estate cycle, and looking at 58 or 62, or I've lost track about how many cities and towns we're looking at in terms of updating the real estate cycle. And there's so many factors that come into play in the world of real estate, and interest rates is only one of them, and it's only an influencer, by the way. And so that's a whole different discussion. But the point is this, is that on social media, you're getting to your point, a very kind of bad news, negative feedback, and it's just not the case. That's what I'm saying.
And at this summit, this was probably 12, maybe 18 months ago, I said something interesting at the summit that I recall now, which was, there's this social media, the one thing it does negatively is that it reinforces your current pattern of thinking. Totally. Which is if you're naturally a negative person and you look into negative stuff, the algorithms just feed you so much of that stuff that you can't get yourself out of that rat race. No. And that is the problem with social media. I love the fact that everybody can post and everybody has a voice, and I think that's awesome. The problem is the algorithms that feed you more of what you already are thinking, and as a result, no one's critical thinking. They just get fed more of the stuff they already believe, and then it becomes this really challenging time, which is what I think we're facing.
Well, I think there is what you just said is people are not critical thinking, and I think that's what we need to change, and we need it to change, and the only way that can change is actually people having the discipline to not buy into what's going on, and even actually backing off of social media. But that's on a kind of a personal development note, or even a professional development note. And I think that when we look at social media and the messages that are out there, I look at it having been in business 38 years, having been an investor over 20 years, having coached and worked with literally, I guess, probably tens of thousands of real estate investors now. And I'm looking at it and I'm going, this is so wrong. How does this information continue to get put out there? And why do people continue to buy into it? That's where mistakes get made. That's where a lot of people are getting kind of bit in the ass right now because they went down that path of not great insights or information. They got caught in FOMO. They got caught in real estate. I'm a genius. And guess what? Now they're starting to pay a price for it. And we've only just begun.
We'll talk about this definitely more in this episode, but there are some that are paying an actual price, and I agree, Patrick. But the great majority of people, including those watching this show right now, are actually not paying a price. They have created this fictional fear and this fictional pain or gap. We talked about gap and gain. They've created this fictional gap in their mind, and that's creating a lot of pain for people right now when it's, in fact, not even a real gap. And we'll talk more about that. Like, let me transgress into an actual example regarding interest rates. A lot of investors are freaking out about interest rates. And for some, it's having a real fundamental impact on their portfolio. Got it. Awesome. But I've questioned a few people that were freaking out. And I said, okay, well, let me just ask you a couple of questions. Number one, how many properties do you have? And they would say, oh, I have, two investment properties. Okay, got it. And, are you currently renewing your mortgages? No, I locked them in for 5 years last year. So then why the hell are you freaking about interest rates when you're locked in for 5 years, and you locked in last year when the rates were extremely low? So you're good. You don't have to freak out about interest rates until you have to renew in 4 years from now. That's what I mean about people creating fictional pain in their mind, when that person that I'm referring to here, they don't have to freak out. Now, if there's someone that just bought 12 properties at the height of the market at the beginning of this year, and right now they're getting hit because they put them all on variable, yeah, that person's got a real problem to deal with. But that's not everybody, Patrick. And I caution people to really look internally, look at your portfolio, what's actually happening in your life, not just what you think you're supposed to feel.